Bitcoin and Ethereum held on to key supports last week after Grayscale selling weighed on the market. Dovish central banks and the first rate cut from SMB showed that easy monetary policy is coming back. And skew reversed sharply as puts were monetized and traders looked for the next leg higher. All this and more in this week's Crypto Options Unplugged. Welcome back, everyone. It's Imran from Options Insight, back with another episode of Crypto Options Unplugged. I've got my man Dave here from FRNT. How you doing, man?
Good. Yeah, good. Exhausted.
Back above 70k?
Back above 70k. We had DES London last week as well, so it's, everything's a bit of a blur, and I think everyone's sort of got colds and whatnot from just
too much partying, mate. Too much partying.
Burning the candle, definitely burning the candle at both ends, but also, yeah, what a massive week for crypto. Massive week for macro, actually. Having last couple of weeks we've been here and not too much has changed. Yeah, it was quite a big week, and we can dig into that. But yeah, and you know, all of a sudden we're back above 70k, and the world looks quite different again. Yeah,
so Grayscale was weighing on the market last week, right? So what's that about?
Yeah, well, I guess like there's two things. So like the Grayscale outflows have continued to be quite large. A lot of that we expect is still like bankruptcy related selling. So you've had those outflows, and then the inflows into the nines have kind of relatively sort of slowed a bit. So we've seen sort of net outflows, and that was the story throughout last week. And obviously, you know, it's been such a positive driver on the way up. It's sort of reasonable that it becomes a negative impact on the way down. And then like this week we've kind of yesterday we had a positive inflow again, and sort of things are turning around.
How big was this?
I forget the actual number, but it wasn't huge. But and we still had a big outflow from Grayscale, but we were net positive again. Yes, it was less than 100 million inflow, but you know.
Do you subscribe to the idea you might get quarter end buying in those ETFs as well?
Yeah, all that stuff will sort of play into it. But again, I kind of feel it's all noise really in the scheme of things. Because I still think, you know, the positive demand shock that's coming from the ETFs is still there. We didn't have negative outflows from the nines, so you know that would perhaps be a more worrying situation. So we know the Grayscale. You know, we've got Genesis and all those sorts of outflows. The fact as well that you know Bitcoin was relatively well supported given these consistent outflows throughout last week, but the Gemini repayments are going to be what we call in kind, right? So they're going to pay in Bitcoin. So it probably means there's some spot buying as they sell out the Grayscale. They're going to be buying back spot Bitcoin as well, which is probably why we were relatively supported and wasn't like a huge impact on the market. But yeah, like so we had those outflows. We had, you know, washout in leverage and all those things that you'd expect. We're 70-80 asset class, so we're going to have some pullbacks. But it kind of felt comfortable.
Yeah, I mean, we flagged those levels, right? 60k on Bitcoin, Ethereum 3000 didn't quite touch those levels, but it got within a whisker of them.
Yeah,
right?
and to be honest, the option market called everything perfectly, right? Some short-term volatility, but there's no change in the kind of more medium-term sort of bullish view in how people were positioning. It was like kind of this short-term positioning for this little vol event, if you like, or shouldn't even say vol event, this sort of downside sort of washout. And then yeah, still wanting to sort of look to position for.
Well, they're certainly looking.
Upside.
They've flipped round now, looking to the upside, which we'll talk about in a bit. But yeah, it's quite a dramatic reversal.
But yeah, so it's huge last week. We spoke because we'd had the Bank of Japan in hand when we sat down last week. I think that was significant in terms of it was a potential massive like risk event for the market. Them coming off of negative rates. I said at the time that I felt it was more like tweaking around the edges.
You nailed it.
And it wasn't the big, it wasn't the big event to really drive, you know, a 0.1 hike in interest rates isn't sufficient to drive like a big portfolio reallocation, like from all the Japanese investors that hold foreign assets, be it bonds or equities, for them to start selling those to repatriate home. That's the big fear with the Bank of Japan. So it felt like tweaking. They dropped yield curve control, but yet they're still buying the same amount of bonds, and they said they will be nimble to buying if we got spikes, which kind of feels like yield curve control. So like markets breathed a sigh of relief on that, and it removes a huge risk event from our markets in the short term at least. And then we went on to the Fed, and I spoke about as well that I felt the market had moved to price out the Fed too much, and the kind of, to be honest, the Fed have actually been quite consistent since that dovish pivot in December, in that they're quite comfortable with where inflation's at. And we had a couple of upticks, obviously, in January, February, and the market was starting to really, we even had stories about people talking about rate hikes. And I was like, no, that's not happening. The Fed are on the path to cutting. They realise that real rates are pretty high at this juncture. And I also think they are concerned about these sort of debt levels and this spiralling debt dynamic. And actually, when you think of the dovish pivot in December, it came when 10-year yields were pushing that 5% level, and looked like the US Treasury market looked a little bit in trouble. So I think they're really conscious of that. And then the weight of proof is on like inflation to really stop them from cutting rates. And I think that was a message we got from the Fed, that they're pretty comfortable where things are. I think he even put down recent stronger inflation prints to like seasonal sort of quirks and what have you.
Their projections of core PCE is their key inflation gauge, right?
Yeah.
And their projection for the end of the year ticked up.
Yeah.
Yet they didn't budge on their dots, right? So that means...
No, so the median dot stayed at 3 cuts. So implicitly, what they're telling us is that they're comfortable with a higher level of inflation
than the target rate of 2%.
Than the target rate of 2%. And we might look back at last week as one of the most pivotal moments of this year. That have the Fed gone from a point target range of 2% to now being a range of say 2 to 3%. Right now, that's got huge implications.
But they haven't outright said it. They just implicitly said it in their projections.
Exactly, and they can't outright say it, right? They can't outright say it. But I think you saw gold start to move. Like, and I wrote about this over the weekend in Connecting the Dots newsletter that I write for London Crypto Club. We started to see gold move, and it's like gold was kind of picking up something. Bitcoin was still caught in the ETF flows and all that stuff. But I was like, potentially here we've got a Fed revising, higher their kind of target range for inflation, which basically means they're going to keep real rates lower. They're willing, or as I call it, they're willing to run things hot, and they're going to keep like real rates lower and if you like artificially suppressed. And this is like the big picture thesis for Bitcoin. So it doesn't surprise me that we've now kind of caught onto that tailwind. I still think it's got, as market digests this, a lot further to go. I think Bitcoin's going to rip. I actually think Nasdaq's going to rip. And you're seeing it in gold and other assets. So I think we're back in the monetary debasement game. We're back in the let's get real rates as low as we can. And partly it's because we've got this kind of debt spiral that we need to be sort of concerned about. And the Fed are going, right, we're going to tolerate higher inflation, and they're trying to tread that fine line between, unanchoring inflation expectations and all that, whilst also going, right, we'll keep it running higher whilst trying to get real rates lower.
I guess the only one caveat I would make is oil and gas prices are flying, right? So as we get closer to the election, if the price at the pump is too painful for voters, is there going to be political pressure for the Fed to do something on inflation, right? That's the worry. I know it's volatile, but it's just the political message, basically.
Yeah, and again, like all these things are problematic. And the thing that I've argued is like, and this is like my long-term bull thesis for Bitcoin, is that like there's no way out of this stuff, and the best case scenario for the Fed is that inflation and everything does just sort of we go back into this kind of disinflationary world, and they can run the easy policy and deal with the debt like through that way. but I think they'll eventually be faced with what I call impossible choices, right? Because we're either going to deal with inflation or we're going to blow the whole system up. Which one you get, and ultimately they'll basically save the assets, which are the collateral that underpins the entire system, and they'll let inflation sort of run if they need to, and ultimately the escape valve in all of this is fiat currency. And where I see like the macro bears and everything getting everything wrong, in my view, is they're pointing out all the issues as we're talking about. Like, this whole thing is unsustainable in and of itself, but what they're missing is the willingness for the Fed at this kind of what we call the central bank put to actually support the assets and kind of allow inflation to do its thing, because I don't think there's any other way. There is no other way.
You know what? People need to start paying for their petrol in Bitcoin.
Yeah.
They need to buy Bitcoin and be like, well, the price of petrol in Bitcoin is going down all the time. So that's the way I deal. That's the way I deal with my inflation concern.
Yeah.
If I can't afford gasoline, I should buy Bitcoin and then look at it that way.
yeah. I mean, but that's I think that's. Do you know what it is? Like, we've had and people like myself and others who have been talking about sort of Bitcoin and being this inflation hedge, and it's kind of, well, what inflation are we talking about? Is it like CPI inflation or asset price inflation? But we've kind of had a level of inflation, certainly in assets, that's kind of gone unnoticed by people, and general like broad inflation, like when you look at CPI, it's kind of been slow enough to not be on the front pages, right? But yeah, everyone's felt it over a period of time. Now it's become a little bit sharper, that everyone feels it. Like more, they're more aware of it than they were, and even like with asset price inflation, and I think that's actually going to continue driving people into assets, because they're starting to realize I need to hold something to protect myself from this, because everything's running away from me.
Yeah, I mean, this is something. Obviously, we're in finance, so we're lucky. We've kind of experienced this and cottoned on to this thing a long time ago, right? But it's like when people get mortgages. And they've been told, yeah, when you get a chance to pay off your mortgage, you should pay off your mortgage. And when rates were like super low, that was the stupidest thing you ever could have done.
Yeah,
because your mortgage is a fixed liability, and then you can use the money to own assets that are only going up in this fiat debasement world. Right now, it's a bit harder now to carry a mortgage with rates where they are. Yeah. But in theory, the kind of the argument still holds. If the rate at which your assets is rising is faster than the rate at which your liability is costing you to fund it, then you shouldn't pay it back, basically, right? Yeah. So it's
and it's funny because we get certainly when you're in the crypto space, we all get excited about all these sort of moves and squiggles, and I say don't focus too much on the squiggles, and because the dynamic, like the big picture dynamic is well in play, like it's it's playing out so well, so beautifully, that that's why I feel bullish all the time. I'm so comfortable within it, because I'm seeing this debt spiral that's going on in the US. I'm like, it's not sustainable. But that doesn't mean I think the bond market's going to blow up, because the Fed will just take it all onto their balance sheet. And then people go, yeah, but what about inflation? It's like, well, that's like something's got to give, but the thing that will give ultimately will be essentially fiat currency and the value of fiat currency.
The point you made about the Fed will take it onto its balance sheet, well, they even mentioned last week about tapering pace of the balance sheet runoff, right? Yeah. Which was the little tell that they're gonna, which you've been talking about for weeks, right?
Yeah.
That they're gonna reduce QT.
Yeah.
Because they have to, because the RRP is getting run down.
And they talk about it in terms of maintaining sufficient amounts of liquidity in the market. But when you think about it, what does that mean? They mean we need to keep enough money in the market to stop everything crashing. Like that's essentially that's essentially what they mean. So all these sort of macro bears out there, like, this big credit event's coming. It's not coming, because they're not going to let it happen. They're not going to let it come. And you're kind of right in your analysis, but just go buy Bitcoin, and that's your hedge against all of this. Because you are right in that it's kind of unsustainable, but essentially they'll artificially support the assets. They'll artificially support treasuries, and it will actually be the currency that goes. So therefore, the best tail hedge on all of this is just to be long Bitcoin, in my view. The other big thing, and which we should mention, is the Bank of China as well, People's Bank of China. So I've been talking about how we need sort of stability there in China, because I felt that they've obviously been battling a lot of capital outflows. They're really struggling with their economy. They're actually in a deflationary spiral. They've got this sprawling property crisis that they're trying to sort of sort out. And there's capital controls in China, right? So it's not easy to get your money out of China. Now, Bitcoin is one place you can. So China have been very incentivized to kind of try and keep a lid on Bitcoin to discourage that and maintain what I've been calling this veil of stability, like all is okay. Last week they set what we call like a higher fix of like against the dollar, or a lower fix if you want to think of it in terms of their currency. Now, like China, just to not get too technical around it, but China have like a semi fixed exchange rate against the dollar. So they set a fix and they allow it to trade in the 2% band either side of it. So they actually fixed that higher than what the market was expecting, which kind of showed a willingness for them to allow the currency to weaken. Now, I think they've been battling with this in a way, because obviously US rates have been so high, money's trying to leave the country. So they've been artificially trying to keep like dollar CNH like lower and keep their currency stronger. And this was the first time when they kind of went, do you know what, we might have to let this go. I think partly because of the Japanese currency, which is their biggest competitor, has been weakening, continue to weaken.
Yeah, even after the BOJ, right, it weakened a lot.
Yeah, and broadly across Asia, there's currency weakness there. So it was kind of like, are they now going to devalue? Now, why that's really interesting is they can maybe try and keep a lid on Bitcoin for a bit, but if we just get like capital flow out, like, you know, in size out of China into Bitcoin, then they won't be able to stop it. And a comparison to use is when they surprised the market in 2015 and devalued the currency, just in a one-off devaluation. In the 3 months or so after that, Bitcoin went up 3x. So we're not quite there at that point yet.
And that was early days as well. That was 2015.
Yeah.
So like the amount of money it would have taken to move Bitcoin 3x was a smaller amount of money. Yeah. Right? But now as the market's so much bigger, the price impact, we're not saying it's going to do 3x. But what we are saying is that is an incremental positive flow for Bitcoin if more money leaves. Basically.
Correct.
Yeah.
So last week was massive. So we had the People's Bank of China kind of ease up on the currency a little bit, call it like a mini devaluation on the currency. We've had the Fed implicitly go to a higher inflation targeting regime. Then we had like the SNB with a surprise cut, kind of kicked off the rate cutting cycle for the major central banks. You had the Bank of England who kind of pivoted dovish as well, and they're now sort of you know, setting the market up for cuts probably in June. ECB are set to go in June. Fed are set to go in June. So we've almost got this coordinated rate cutting cycle.
Yeah, synchronised.
We got US debt still blowing up and spiraling out of control. Larry Fink, I think, was on the wires earlier today saying that this is a real problem. So it is just coming together in this like beautiful crescendo, I think, to really drive sort of Bitcoin and take crypto to the next level. And now as well, on top of that, we're seeing the ETF flows flip positive again. So I think we're set to sort of take and make new highs again in Bitcoin.
Yeah, I mean, we may even do it by the end of the day, right? I mean, it's one of those things. Yeah. It does tend to like a move when we're having our chat.
It does, yeah.
But yeah, okay. The options market kind of agrees with you, right? Like you said, the option market kind of called the correction pretty well. Let's have a quick look at what I saw in options this week. Okay, so in crypto vol this week, we saw some crazy moves. So last week we were down about 8% on the day. We then bounced back violently, up 8% the following day, chopping around, seeing kind of 4 to 5% moves since then. Over the weekend, but net market finishing the week higher, flushing out those weaker longs. Looks like there was a fair amount of selling from GBTC. Obviously, that got worked through. The buyers stepped back in, protection was unwound, and we saw some decent realized. So we saw a pop from about 70 odd to touching near 90 on realized. We're sitting just above 80 right now on Bitcoin. Ethereum realized was even more dramatic, actually touched over 100%, but similar moves kind of mirroring what was going on in Bitcoin. Now, we had been saying that those big support levels at 60K on Bitcoin and 3,000 on Ethereum were the ones to watch, and that's pretty much, we didn't quite touch those levels, but we got very close. So those turned out to be, the supports that everyone had their eyes on. How has the vol term structure moved this week? Well, we haven't seen a huge move, even though we've seen very decent realized. Implieds haven't really moved up quite the same way, like 10 points or so, or we've 10 or 15 points like we've seen in realized. So we saw front-end weeklies actually slightly lower. The part of the curve that is the highest is April. That was up about 5 vol points here, as obviously the halving bucket, which is now the 1 month expiry. And we did see very small increases in the rest of the curve in Bitcoin as well. And similar sort of story in Ethereum, moves not quite as dramatic in April, but seeing a slight lift up of about 2 vols in the back end vols there, and weekly's not doing much. So interesting to see this front end trading at around 70, even though realized on Bitcoin is in the 80s and realized in Ethereum has been in the 90s. So Gamma's actually for sale right now. It's trading cheaper than what we have been moving like. And, if we break to new highs, I would expect front end to catch a bit of a bid because this looks like it's trading quite cheap right now. Okay, then looking at flows, we obviously saw quite a lot of two-way flow in puts. We saw puts and put spreads that were bought before the sell-off, and then as the sell-off materialized, we saw monetization of that type of flow, as you would expect. People happy to get back long again in that 60K area. We also saw upside calls bought March and April in the 66 up to say 71, 72K area. Those tended to be the strikes of choice. Going slightly longer dated, we also saw longer dated call buying in September. That 90K call was a decent clip bought there. And we also saw some general vol buying. As I said, Gamma does look like it's pretty good value now. So people taking advantage of that on the vol side and buying the 29th of March 68K straddle. So just looking for a move in either direction, just thinking that is probably priced a bit cheaply relative to what this market could potentially do. If we do start to see some inflows come back in with quarter end this week, then there may be fireworks to the upside. And I think owning that Gamma could actually pay quite well. Okay, skew was that big indicator, remember, a week or two ago when we saw that Ethereum skew on the put side really spike. That was this move here. That was a signal for some caution. We then saw the sell-off, skew pushed to even higher levels on Ethereum there. But as we made those lows and reversed them last week, we did see skew come back down. And now you've got Ethereum 1 month skew down close to flat. And we've got Bitcoin that was flat back in a call premium of near 4 vols. So clearly we've seen a big turnaround in skew. We've seen monetization of puts. We've seen demand for calls come back in that front end skew. Everyone's saying, okay, we had the flush out we were looking for. Now we're comfortable being long again, and let's play the upside. So the options market has certainly had a shift here where the short-term sell-off they were looking for happened, and now they've repositioned themselves back for the upside, looking for new highs to be taken out. Let's see if that's how it plays out. That certainly seems to be what the option skew in crypto is playing for right now. Okay, and then let's close it out with our relative value. So you can see here, the dotted lines represent what the realized vol has been in the spread between Ethereum and Bitcoin. And this shows us that on a 10-day basis is looking at about 13 points, and on a 30-day basis it's about 5 points. So Ethereum's clearly realizing over Bitcoin, but if you look at where the curve's priced, well, the front-end weeklies are maybe 2 vols over for Ethereum, but in the 1 month we've actually got a Bitcoin premium, and in the back end you've got a marginal Ethereum premium, but nothing to write home about. So clearly this curve is being priced close to flat across the curve, even though Ethereum's out realizing. And that shows you that there's demand, there's marginal demand this week for Bitcoin options because people are thinking the halving's in play, Bitcoin's going to take out the highs again, and that is going to be the driver. And Ethereum's optimism has somewhat faded given the ETF approvals look unlikely to happen by May. So people are thinking, okay, we don't need to jump in and buy loads of call options and buy loads of vol on Ethereum right now. We can kind of wait a while, wait for the news flow to improve, and then get into that trade. So that's why the vol's not really, even though we're getting decent realized out of Ethereum, the implieds are more a function of what people are expecting going forward. And it seems that implieds are suggesting that the next leg higher is going to be driven by Bitcoin. Okay, that is what I'm seeing in crypto vol this week. Okay, so that's what we saw. What do you make of that?
Yeah, interesting. It's interesting to say that we're seeing the options market call like some of these moves. Last week when like put skew seemed like a little bit extreme.
Yeah, it pushed to quite high levels. We said.
Yeah. And you kind of called that actually as this could be a sign that we're probably going to kind of bottom out here.
Yeah, well, what I said was, if we test 60k and 3,000 and skew doesn't keep going higher, then you get that what you call a divergence. And then you saw the reason that didn't really push higher was because people started selling those puts back out and monetizing. That was your signal, basically, that, okay, people who have bought puts are happy to let them go now. And then we had a really violent, very, very fast bounce off that.
Yeah. And then interesting as well that we've got implied still trading relative cheap to where realized vol is.
Yeah, so my take on that is basically there hasn't been much incremental buying of options. So all that's happened is people bought options, they bought downside options to protect the move, and then they flipped those options into upside. But net, they didn't buy a load of new options. So implied vol is only going to go materially higher if there's a net purchase of Vega, purchase of options, right?
Yeah.
But if you're just switching your inventory from owning puts to then buying upside, you're a seller of vol in one place and you're a buyer of vol in another place. Net is vol neutral. Yeah. So you'll see skew move materially, but you won't see implieds move that much.
Yeah.
And then you also had a cross asset vol reset after that massive macro week, right? With all the potential catalysts. So in general, vol was going to go a bit lower after those events passed. So there's probably some of that at play as well.
Yeah. So that does that for you again provide like opportunity? Like where's the trade for you in all of this?
Yeah, I think so. I think you're obviously very bullish, and I'm quite bullish for this week as well. I subscribe to the idea that we could get some quarter end buying. The fact that we had that big outflow last week has kind of got exhausted. We've already seen the price bounce, and we're a whisker away from the highs again. So if the highs get taken out, the next obvious target is around 80k, right? So I think gamma. I think very, very short dated gamma either this week or next week expiry isn't pricing that much, right? It's pricing a 70 vol. And if we could go to 80k by the end of the week, that's a lot higher than 70 vol, right? So I think very short dated upsides probably an own, or even at the money ish options are probably an own. And then you could use like April options or May options far out of the money to kind of finance some of that, because that's where the vol surface did catch a little bit of a bid in April and May, and particularly on the upside as the call skew came back. That could be like a nice sort of call spread setup. Yeah,
interesting. And the other thing that's interesting to me is obviously given the moves over the past week, like positioning in like spot and perp position is probably a lot cleaner than it was. Funding kind of normalized like quite a bit. And it doesn't, like you say, if you look at where we had the extreme sort of put skew last week, we've kind of reversed that, and now we're flattish, right, on the skew side of things. So again, it doesn't feel like there's any kind of extreme pricing here. Like, so it feels like we're set up to start pricing in the next kind of leg higher. So yeah, I kind of like the idea that we should be owning some volatility here, and obviously I'd express that for owning topside.
And the last thing I'd add is there's quite a big expiry this Friday. It's the March expiry, so it's been available to trade for many months, this March expiry. So I think it probably accounts for like more than half of the open interest in options, right? Looking at where the dealers kind of seem to be positioned, it looks like dealers are short the local strike. So 70k on Bitcoin, 35 to 3,700 on ETH. Those are short strikes. So if for as long as we stay around here, the gamma on those strikes is going to get bigger into Friday. So if dealers are contending with short gamma on those strikes, that could keep the market quite choppy and quite whippy, basically. Now, it seems like they're long at 75K. So if we push through up to 75K and there's no new incremental flow, then we might find some gravity up there. But I'd be surprised if we just sit around here all week.
Yeah. Well, interesting week ahead, and it's looking certainly more constructive than it was this time last week.
All right, so the options market has been leading pretty well. It's gone a bit nuts for cool skew, particularly in Ethereum. Which actually, let's just talk one before we go about Ethereum. Yeah. Do you subscribe to the idea that the next leg is driven by Bitcoin? Because Ethereum has kind of been dragged up with it back above 3,600. Yeah. And I was surprised that it kept pace with Bitcoin in this last little bounce. What do you think about that?
Yeah, it's difficult at the moment because the market is, and actually the market's kind of pricing out the odds of certainly the ETF approval in May. You've got this SEC investigation now into ETH, which is going to certainly make May look problematic. And some would say that it won't happen at all. I'm still of the view that we will get the ETH ETF. I still think the fact that we've got a futures ETF, it's really difficult for them to, argue that we can't then have the spot ETF. But yeah, I'm not sure how they kind of work out how it plays out with the whole ETH being a security thing. But that's kind of just dampening things a bit. I am surprised that it's kept pace because I even though I've been really bullish ETH, I've been surprised by that. I think in part though it's we did have the upgrade, the Denkan upgrade, and all that stuff. So there is real network activity and there's other stuff that's not just purely about the ETFs. So I have been surprised. I also am now of the view maybe we've kept pace with Bitcoin. Have we now had a lot of FUD around ETH that actually we could explode higher? So just kind of taking the flip side, because I certainly don't feel anyone's particularly massively balled up on ETH. And it still feels like the more difficult trade. It definitely feels like the more difficult trade.
I just feel like the crypto market's going to basically focus on what is kind of happening now. And we know the halving's happening now. We know the ETF inflows are happening now. It's like, yeah, ETH will happen, but when the time comes, that's when we'll pile into it. Yeah. But it's kind of, that's why I think the vol market is essentially not pricing any premium for ETH, even though it's out realizing right now, because it's saying, yeah, ETH vol's not interesting anymore because the event has been pushed back. Now, when it's been pushed back to, I don't know. But what I'm really hoping and praying for is that Bitcoin explodes higher on the ETF flows reaccelerating, taking out the highs. The halving just being all you're hearing about in all the press, basically, and sucking more people in. The ETH Bitcoin cross dumps through key supports, and that chart just looks horrible. And then you'll get a really nice entry point into those call switches again, which I got out of a while ago. But those call switches out to September, December. If we think if the ETH ETF gets done this year, those are going to set up as beautiful trades. I think.
I think as well. We still. I've said before about obviously over the past year, Bitcoin's had all of the narrative, right? Be it from the ETFs, but also from the macro and then even this safe haven aspect and what have you. And by the way, we've still got things that are pretty unstable, should we say, from a geopolitical point of view. So there's a lot going on there. So Bitcoin still kind of sort of wins the race on that side. But as we transition into this global rate cutting cycle, more liquidity coming back into the markets, that tends to be when we really go into alt season and the altcoins. We've already seen all the meme coins and everything sort of exploding. We've seen Solana obviously really have its move. So I still think actually Bitcoin dominance will fall as it becomes more about liquidity and everyone moves out of the risk curve, if you like, within.
It's probably an H2 story though, right?
Yeah, but as you start to get that, it's hard to think that that's going to happen and ETH just get completely left behind.
No,
So,
agreed. Yeah.
So I still think there's some really positive tailwinds. I just think if we get to a situation where we do start pricing more of a higher probability of an ETH ETF, then we really explode. And I kind of think you don't want to be left too naked around that potential. So I'd still be wanting how do we position for that and start thinking about that. But as you know, like timing is everything. So it's probably something you want to own just further out. And you don't want to really kind of, sort of suffer too many bleeds.
Yeah, and the vol surface, the ETH upside calls are trading at as much premium, if not slightly more, than Bitcoin upside. So that they agree with you, right? The options market agrees with you that longer term, owning ETH upside is kind of worth doing, basically.
Yeah.
All right. Anyway, I think we'll call it a day for this week. Thanks for watching. We'll catch you all next week.